When I first looked at this 10K, I started wondering, how do these immense tech companies actually, well, build the foundations of our digital world?
Right.
It's often hidden in plain sight, but it's where some of the most fascinating innovation and strategic shifts are happening. Today, we're taking a deep dive into one of the key players in this space, Broadcom Inc.
That's right. We've got Broadcom's latest 2024 Form 10K annual report here. It's a detailed blueprint of their operations, and yeah, it can seem pretty daunting at first glance.
Definitely.
So our mission today is to cut through the jargon, pull out the really important nuggets, and give you a shortcut to understanding Broadcom's, well, multifaceted business and where they're headed strategically.
Exactly. We're going to explore their distinct business segments, break down their recent financial performance, and then look at how they're working to create shareholder value and, what the road ahead looks like for them.
hmm
Think of it as unpacking the complex machinery of a global tech powerhouse. By the end of this deep dive, you'll not only understand Broadcom's core operations, but also gain insights into the broader trends shaping semiconductors, software, and how a company like this navigates, the constant push and pull of innovation, competition, and global economics.
Okay, so let's start with Broadcom's original foundation, what they call their semiconductor solutions engine.
The hardware heartbeat.
Exactly, the hardware heartbeat of the company. So this segment, it focuses on designing and supplying a really broad range of semiconductor solutions.
Right.
And what's fascinating here is how they achieve high performance. They use, the widely adopted silicon wafers with CMOS transistors for the high-speed digital stuff,
Okay.
but also more specialized materials like gallium arsenide, GAs, and indium phosphide, EMP.
Ah, for the more advanced applications.
Yeah, for advanced radio frequency and optical performance where, precision is absolutely paramount.
And their reach is just, well, it's incredible. They provide the invisible plumbing for so much of our digital infrastructure. In networking, they're foundational, right? Think data centers, service providers, enterprise networks. They offer Ethernet switching silicon, routing silicon.
Custom silicon, too, which is huge for AI and high-performance computing right now, and fiber optic components.
Then there's wireless. That's particularly interesting for mobile device connectivity, especially that proprietary FBAR technology they have.
Right, that FBAR filter tech is really unique. It's critical for managing all the complex radio frequencies packed into modern mobile devices, makes them smaller, more efficient.
And they also power your Wi-Fi, Bluetooth, GPS.
Yeah, the whole connectivity suite. They're also vital for storage in servers and enterprise systems. Controllers, adapters for both hard drives and solid-state drives, even custom flash controllers.
And for broadband, they're basically powering your home internet and entertainment set-top boxes, gateways, Wi-Fi access points.
Yes, DOCSIS, PIN, all that. And an often overlooked area, but still vital, is industrial. Products for factory automation, renewable energy, automotive electronics.
Optocouplers, industrial fiber, motion control encoders. It's a widespread.
It really is.
So how do they actually make all this hardware? Looking at this 10K, what really stood out to you about how they produce all this? Is there a key dependency or something unique there?
Well, what struck me was their almost total reliance on external foundries,
hmm
particularly Taiwan Semiconductor Manufacturing Company, TSMC.
Oh, right.
TSMC manufactures approximately 95% of the wafers for Broadcom's contract manufactured products.
95%.
Yeah. I mean, this isn't just a supply chain detail. It really underscores Broadcom's strategic bet on a fab-light model.
So they focus on design and IP.
Exactly. They focus resources on cutting-edge design and intellectual property rather than, costly manufacturing plants. But you're right, it ties their fate very closely to a single geopolitically sensitive partner.
But a huge factor for investors to weigh, yeah.
Definitely.
And despite that reliance, they do use internal fabrication for some of their most innovative stuff, right? Like those FBAR filters and certain semiconductor wafers.
Correct. That allows them to protect their key IP and, crucially, accelerate their time to market. You need that edge.
Which is vital. But this raises an important question. In such a competitive and, frankly, cyclical industry, what are the pressures they face?
Oh, it's intense. The
Yeah.
semiconductor space is just characterized by rapid technological change. Think about AI and cloud computing driving demand for totally new kinds of specialized chips, like custom AI accelerators or XPUs.
Yeah, the pace is relentless.
Absolutely. Then there's fierce competition, these lengthy design win processes that cost a fortune before you see a dime.
Right.
And then you have the supply chain challenges we touched on. Broadcom is dependent on a limited number of suppliers, not just foundries, but material suppliers too. The top 5 supply 2/3 of materials, apparently.
Wow. So that creates risks.
Big risks: supply constraints, price increases from suppliers, disruptions from global events, trade tensions. These external factors can really impact their ability to deliver.
Okay. So, having explored that foundational hardware side, which is clearly indispensable, now we turn to what feels like a truly transformative chapter: the infrastructure software engine. This is where we really see Broadcom's strategic future taking shape, and it seems fundamentally reshaped by one acquisition in particular: VMware.
Exactly. This segment is all about software solutions that help customers build, run, manage, connect, and protect applications and data across all sorts of environments: data centers, private clouds, hybrid clouds.
And the why behind this?
Well, the goal is to simplify these increasingly complex IT environments, boost business velocity, and provide, scalability, agility, automation, security, all for those mission-critical workloads. It's a strategic pivot that makes a lot of sense given where enterprise IT is going.
This VMware acquisition definitely looks like a game changer. But, I mean, the size of the deal, the speed of integration, that often comes with significant risks, doesn't it? What did the report say about potential downsides they're bracing for?
That's a crucial point. And yeah, we'll definitely get to those challenges. But first, let's just grasp the sheer scale of the VMware deal. It closed in November 2023,
Right.
valued at approximately $86.290 billion. That was a mix of cash and Broadcom stock.
Huge number.
Enormous. And the stated goal was clear: significantly enhance Broadcom's infrastructure software capabilities and its whole portfolio.
And it certainly looks like it did. If we dive into their key software portfolios, VMware's contributions are just front and center.
Absolutely.
Their private cloud offerings, especially VMware Cloud Foundation, VCF, that delivers integrated compute, networking, storage, management, security.
And what's compelling there is its native Kubernetes support for both virtual machines and containerized workloads. It even enables advanced AI and machine learning use cases.
And that license portability feature seems key too, letting customers move environments around.
Very important for flexibility. And beyond BCF, they also cover edge computing, private AI, specialized telco solutions.
Then you have Tanzu software. What's the focus there?
Tanzu provides comprehensive solutions for app development, operations, optimization. They even have Tanzu AI solutions specifically for generative AI applications.
Okay. And the Vela Cloud portfolio.
That's focused on software-defined networking, or SD-WAN, for distributed locations, and SaaS Secure Access Service Edge architecture. Plus, they have this Velarane thing using AML for network performance and security.
Interesting. And for application networking and security.
Solutions like Zero Trust lateral security, that's a crucial approach, right? Verifying everything inside the network, not just at the perimeter. Vital for fighting malware and ransomware.
Makes sense. They also still have a significant mainframe software portfolio, don't they? Modernizing those big iron systems.
Yep. DevOps, AIOps, cybersecurity for mainframes. They even have these beyond code programs for skills development and cost savings, trying to keep those customers engaged.
Right. And their distributed software portfolio.
That's about optimizing the whole lifecycle planning, development, delivery of business-critical digital services. Think value ops, DevOps, AIOps combined.
Okay. So looking at their software customer strategy, who are they targeting?
Large enterprises.
Yeah.
Across pretty much all major industries. Banks, insurance, government, telecom, manufacturing, you name it.
And the strategy.
It's about strengthening relationships with existing customers, their core base, the mainframe folks, VMware customers, Symantec endpoint users, and expanding the adoption of their broader enterprise software suite.
And this enterprise-wide license model seems key to that.
Yeah, that's a big initiative. The aim is reduce complexity, more flexibility for the customer, easier renewals, all driving revenue growth, ideally.
Okay, these strategic moves are fascinating, really reshaping the company. But what does it all actually mean for Broadcom's performance? To really get the picture, we need to dig into the numbers. The financials always tell the real story, right?
Absolutely. And Broadcom's revenue dynamics for fiscal year 2024 versus 2023 show a pretty dramatic shift.
Okay.
Overall, total net revenue saw a huge 44% increase, from about $35.8 billion in fiscal 23 to $51.6 billion in fiscal 24.
44% increase. Wow.
But, and this is the interesting part, this growth hides a transformation in the mix. Product revenue, mostly semiconductors, it still grew by 7% to $30.4 billion.
Still growing, okay.
But as a percentage of total revenue, it actually dropped from 78% down to
Oh,
59%.
I see. So the other side must have exploded.
Exactly. Subscriptions and services revenue surged by a remarkable 181% to $21.2 billion.
181%.
Yeah, jumping from 22% to 41% of total net revenue. That just clearly illustrates the immediate massive impact of the VMware acquisition.
No kidding. And looking at the segment specifically.
Semiconductor solutions revenue grew that 7% to $30.1 billion. Infrastructure software revenue skyrocketed 181% to $21.5 billion.
So revenue soared. But what about profitability? Did that follow?
Well, this is where the acquisition's impact really shows up in the short term. Gross margin dipped from 69% down to 63%.
Okay. A dip.
And operating income as a percentage of revenue saw a much bigger drop, nearly halved, falling from 45% down to 26%.
Wow, 45 down to 26. That sounds bad.
It looks dramatic, but it wasn't really a sign of operational trouble. It was more the direct accounting impact of the acquisition hitting the books.
Okay, explain that. What drove those percentages down?
Well, when you dig into the expenses, the reasons become pretty clear. First, there was a massive increase in amortization expense
For what?
for the acquisition-related intangible assets from VMware. That jumped from about $3.2 billion in FY23 to $9.3 billion in FY24. That hits both cost of sales and operating expenses.
Okay, that's a huge chunk right there.
Huge. Then, research and development also increased significantly, up to $9.3 billion, reflecting ongoing investment.
R&D up, that makes sense.
And selling, general administrative expenses, SG&A, also saw a substantial jump, likely due to all the integration and operational costs from bringing VMware on board.
Right, integrating a company that size isn't cheap.
Not at all. And the cost of the acquisition itself also showed up big time in interest expense.
The debt they took on.
Exactly. Interest expense more than doubled to nearly $4 billion, mainly because of the debt they incurred to fund the deal. They took on over $30 billion in term loans and assumed over $8 billion of VMware's existing notes.
Oof, okay. Any other big hits to profit?
Yeah, one more significant one. Their effective income tax rate jumped dramatically, from just 6.7% in FY23 up to 37.8% in FY24.
Whoa, why such a big jump?
The report says it was mainly due to a non-recurring internal transfer of some intellectual property rights into the United States.
Yeah.
That shifted the jurisdictional mix of their income and triggered a higher tax bill for the year.
Okay, so a one-off tax event mostly.
Seems like it, yeah.
So the bottom line, net income.
The bottom line reflects all that. Net income attributable to common stock actually decreased quite a bit, from $14.1 billion in fiscal 2023 down to $5.9 billion in fiscal 2024.
Down from 14 to 6 billion. So despite soaring revenue, net income fell because of all those acquisition-related expenses hitting at once.
Precisely. But then this is the critical takeaway for investors look at their cash generation.
Right, cash flow.
Despite the net income change, Broadcom generated a really robust $19.96 billion of cash from operations in fiscal year 2024.
Almost $20 billion in cash from ops? That's strong.
Very strong. It's a critical metric demonstrating their underlying liquidity and the cash-generating power of a combined business, even with those accounting charges.
And their cash position overall.
As of the end of the fiscal year, November 3, 2024, they had $9.3 billion in cash and equivalents on hand, plus access to a $7.5 billion revolving credit facility they hadn't drawn on.
Okay.
And it's worth noting, they also used factoring arrangements pretty heavily, selling off $5.9 billion in trade receivables during the year. That helped accelerate cash flow and boost that operating cash flow.
Right, a financial lever they can pull. So turning to investors, what's in it for them? How is Broadcom returning value?
Well, they maintained a clear commitment to returning capital, dividends, for one. They paid out $9.8 billion in cash dividends in fiscal 2024.
Up from the year before.
Yep, up from $7.6 billion in fiscal 2023.
Mm-hmm.
That translates to an increase in dividends per share from $1.84 to 2.105.
Nice increase. And buybacks.
They also actively repurchased their stock. In fiscal 2024, they bought back nearly $7.2 billion of common stock.
Following on from the previous year.
Right. They bought back $5.8 billion in fiscal 2023. They actually fully used up a $20 billion stock repurchase authorization by the end of December 2023.
Okay, so significant capital return through both dividends and buybacks. Any other shareholder-focused actions?
Yeah, they also did a stock split. In July 2024, they completed a 10-for-1 forward stock split.
Ah, bringing the share price down?
Exactly. That move typically aims to make shares more accessible, maybe more affordable on a per-share basis to a wider range of investors. Doesn't change the company's value, but adjusts the share price and count proportionally.
Okay. So assessing the business moving forward, what's the road ahead look like for Broadcom? What's the strategy now?
Well, their strategic direction seems pretty clear. It's continued focus on integrating VMware effectively.
Job one, presumably.
Absolutely. Strengthening relationships with those existing core customers, mainframe, VMware, Symantec, their core semiconductor clients, and expanding the adoption of that broader enterprise software portfolio we talked about.
And they're banking on that enterprise license model.
They anticipate that model will keep driving revenue growth by, again, reducing complexity and offering more flexibility to customers.
What about investments? Are they planning to spend more?
Yes, on the investment front, they expect capital expenditures, CapEx, to be higher in fiscal year 2025.
Okay.
They plan to continue investing in their operations and R&D, particularly focusing on mission-critical, innovative, and higher-value product platforms across both hardware and software.
And their liquidity outlook. Do they feel comfortable?
Management seems confident. They believe their cash on hand, the strong cash flows from operations,
Right.
and that revolving credit facility provides sufficient liquidity for at least the next 12 months.
Good position to be in.
Yeah, and they even signaled potential for additional debt repayments or maybe retiring some outstanding debt, likely using that strong cash flow.
Okay. But as with any global giant going through such a massive transformation, there have got to be key challenges on the horizon, right? What are the big risks?
Oh, definitely. Several big ones mentioned in the 10K. First, just the overall global economic conditions remain uncertain.
Inflation, interest rates.
Exactly. Inflation, interest rate changes, ongoing trade tensions, especially between the U.S. and China. That hangs over everything.
True. What else?
The massive VMware acquisition itself still presents significant integration risks.
Still, even after a year.
Integration on this scale takes time. Managing and retaining acquired employees, especially key talent, and actually realizing all the expected synergies and benefits, that's still an ongoing challenge.
Talent retention is huge in tech.
Absolutely. Attracting and retaining qualified people, especially engineers and technical staff in hot areas like AI and cybersecurity, that remains a constant competitive hurdle for everyone, including Broadcom.
And speaking of cybersecurity,
Yeah, that's critical. The landscape poses a significant and, frankly, evolving threat. The report mentions the increasing number and sophistication of cyber attacks.
and AI potentially making it worse.
Potentially, yeah.
Yeah.
They specifically mention risks like AI-powered attacks, including deepfake impersonation, targeting their own IT systems, their products, and, crucially, their customer data.
That's scary stuff. What other risks?
Well, back to the supply chain and competition. That dependence on a limited number of suppliers and contract manufacturers like TSMC,
Right.
coupled with the intense competition and rapid tech change in semiconductors, that demands constant vigilance. Any disruption there can hurt them badly.
And regulation. Big companies always face scrutiny.
For sure. Broadcom operates under various domestic and international regulations. They can face costly regulatory investigations or anti-competition actions, especially given their scale and market positions now.
And finally, protecting their own tech.
Absolutely vital. Protecting their extensive intellectual property portfolio they mention, having over 20,000 patents, is crucial for maintaining their competitive edge against all those rivals.
Okay, so quite a few challenges to navigate there.
No doubt. It's a complex landscape.
So we've journeyed through Broadcom's dual engine strategy, haven't we? From its deep semiconductor roots, really embedded in our digital infrastructure, to its rapidly expanding footprint in enterprise software, driven by that huge VMware deal. We've seen how a massive acquisition like that can dramatically reshape a company's revenue mix and, well, its financial statements, at least in the short term.
Right. Even while it's generating significant cash.
Exactly. And we've highlighted their commitment to returning value to shareholders through those dividends and buybacks.
So as technology becomes ever more integrated and complex, with AI being woven into both hardware and software now, how will companies like Broadcom balance innovating at that deep foundational level with building these comprehensive interconnected ecosystems?
That's a great question. And what does this ongoing integration, this convergence, mean for the way you interact with technology every day? Often, without even knowing the giant, intricate systems powering it all just beneath the surface.
Something to think about.